Stocks on the move for another week. Today's date is the 9th of March 2023. My name is Richard Lee and I manage the Stockradar.com.au website for you. Okay, the market is marking time around that 7,300 level. We've got a big lid just above it, the old highs, but we still seem to be holding this uptrend, the natural sequence of higher highs and higher lows, which I'll show you shortly when we look at the ASX 200. So we're now nearer to its solution. We've got a wild ride caused by the reporting season at the moment. We've had some big ups. We've had some big downs, Domino's, Harvey Norman, but hopefully we're winning a few more than we are losing at the moment. That's the name of the game. So I'll focus on the bottom. I focus on the bottom-up stock-specific stocks rather than the market. So with a lot of the leaders, the banks, pressure on them, the Rio, BHP, not really going anywhere at the moment. The index is pretty flat. So a lot of the other stocks are shifting around in there. Gives you an idea, give you some opportunities to have a go. But today I'm going to talk about discovering price movement in trading tactics, and we'll have a good look at that. So firstly, let's get to our top 10 ratings for the week. Top 10 ratings are BlueScope Steel, doing really well. Champion Iron, just hovering at those highs. Auckland International Airport, a new addition. Chalice Mining, Fisher & Paykel in the health area. QBE is doing really well. South 32, a bit up and down. A little bit of bad press the other day from, I think it was Current Affair, about them moving in on some poor, next to some poor farmer and ruining their lifestyle and their views and everything. And maybe there's a little bit of negative sentiment from that caused a little bit of a downtick this week. But who knows? In the end, it doesn't really matter. It's the South 32's performance that will kick it higher. Overall, we've got Steadfast doing well, Stanmore Resources and Seven Group is also teetering on those highs at the moment. So a good bunch of stocks. If you're in them, good luck to you. They're the ones that are running at the moment. So make sure you stay with those top 10 trend intensity ratings to keep going higher. So don't forget to check out Trading Centre for all an update on all of our stocks, the exits, entries, stops, key, reversal points, and all the updated trend intensity ratings each week. Okay, so firstly, as I said before, trading tactics, discovering price movement. We're going to first get straight into the markets. Okay, Dow Jones Industrial Average, marking time again. We tried the downside this week. We're back up trying. We tried the upside a bit. We come back down again this week. We're just hovering above a bit of support there. We want that to hold because if it doesn't hold, it really does open the way for a fall right back down to $28,700 points. So we've got the highs above here. So we're in that tricky situation, as is the ASX 200. Again, focusing on the indexes is difficult sometimes. The stock-specific stuff is far easier because you concentrated on the one stock movement rather than a whole group of stocks. Okay, the S&P 500, again, not looking too bad. We did have a bit of a test this week. We had a bit of a sell-off from the highs for sure, but we are still making higher lows at the moment, so I'm not too concerned. We have a bit of a bout of selling, which didn't do too much damage to the price, so let's just run with it for the moment, and hopefully we're still looking for this turn in prices in the indexes, and the same with the Nasdaq. Again, it's not too bad. There's some impressive volumes here at the moment that's kicking it higher. I really think this probably area down here is turning into a fairly good base point at the moment for the Nasdaq, so let's hope that's true. Okay, commodities, gold, it's right mid-range at the moment. It tried down, tried up, tried down, doesn't really know what to do. It's confined in that trading range at the moment until it breaks out. It doesn't really do much for me at the moment. Copper, again, it tried upside, but it's back down testing those support areas again. We had a breakthrough here, but you can see there's some pretty hefty debate going on here between the buyers and sellers. So that's by no means certain. We're going to have a big resistance area above and we have a little uptrend below to support it. So, it's a tricky situation, but normally I run with the trend. That's what I favour over anything else. So if it was a stock, I'd be holding that stock because it's going up. Okay, Brent crude, again, it's just hovering, not dropping down. But still in a downtrend at the moment. It hasn't broken that downtrend, but it is holding support. So we're pretty sort of, neutral on Brent crude. There's really not much for us to say there apart from the fact that it is trending down. Okay, now to the ASX 200, our fun index, which we all like to look at, even though we know it's dominated by about 20 stocks. But here we are, it's sitting there. You can see we've got the downside, the upside. The last couple of weeks we've tried. We're below the 76.29 area. and we're just above a support bubble here with a moving average, some horizontal support there. So really you can see this move up. We've broken this downtrend here. It rallied, pulled back. We've still got the high, low pattern unfolding there. So while that's true, we still hold to the upside on this one here. So although we're a bit concerned, some people always worry, and there's always things to worry about in the world economy and supply chains and all sorts of things. I'd rather follow the price and worry about nothing else at the moment. And the momentum index is still holding up and still bullish. So we just have to wait and see what's going to happen there. So now we're going to go shortly to our stock specific situation. But before I do that, I'm going to update you with the stock picks. Okay, we actually lost 3 stocks last week. Okay, so we're actually down 3. A couple got stopped out, reporting season probably, a couple of profits being taken. So we're down to 55 of 181, which is actually 53 stocks of 160 stocks, and there's 2 ETFs in there of 21 that I cover. So not many, a lot of those index ETFs are index based. They're not going up, so they're not in the pick at the moment. So that's what they're doing. And if we look at the portfolios, we're sort of marking time a bit at the moment. The conservative has been steady at 8.1. Not that happy. It's been very low in the stock holding, the equity exposure for a while. So that's always sort of suffered a little bit, but and we've got no cash returns at the moment, so that makes it a bit difficult. But it's still returning a positive CAGR. Our favourite one, our 5-stock Energizer, which has been running for 20 years, is still 17.4%, holding up well. 100% equities, 5 out of 5. The Energizer 10 is full at 10 out of 10. 100% equities, 12.9% CAGR. The one we started, the 5-stock portfolio, we started in August 20, is full at 5, and it's a 12.3% CAGR. And the Energizer 5 we started in March 21, which is probably about 2 years ago now, is still at full at 5 and showing a 9.9% CAGR, which is not bad. This last 2 years has certainly been a wild ride. The COVID crash, the last year, before we had the last rally, has been very, very difficult. So I think those portfolios have actually done very well. Provided you follow what you do, what you're supposed to do, you'll be okay in those situations. Okay, so now I think we can probably go to have a look at a few stocks. That's all I want to go through there. Okay, so last week we had an interesting group of stocks there. We looked at some of those ones, ATS, Metcash, Auckland National, which broke higher. We looked at Qantas. I'm going to show you again Qantas this week. It's just been an amazing stock. It's just being bought. So until that changes, we hold that. A couple of other little stocks there, Mineral Resources and BSL's also doing well. So this week, if I want to start off with a couple of leaders, firstly I want to look at NAB, which is another bank we haven't looked at for a while. It really hasn't done an awful lot since we had that big trending up phase from 21. Okay, so this was a big trend up phase we had to 21. It took us up to $34, and there it stopped, and we got stopped out here, and we took our profit and ran. Now, since then, the market's come down. It's rallied towards the high. It hasn't got to the high. It's failed there. You can see here's a fairly big top here. So it's actually failed here a couple of times now, and we've got lower high syndrome here, which is not a really good thing, as you know. I don't like these sort of things, and now it's starting to pressure that downside. We've got a few lows here to watch. But there's nothing overwhelming on the selling buy, so it's not heavy selling at the moment, but the price isn't going up. And we've got the momentum teetering just above 0 at the moment. So all in all, we've got a trend intensity rating of -5 for NAB. So it's actually slightly erring on the negative side there. We've got lower highs pressuring the buyers at the moment, and that's my worry at the moment at this stage here. But I'm neutral in the stock, and I'll stay neutral for the moment as I am with all the banks. Okay, the other one is Rio Tinto. I'll try to cover some of these leaders just so you can get an idea of what I'm thinking. Rio really has it's been in a range since 2021 now. 1, 2, 3 highs at the top here, 2 lows at the bottom here, or 3 if you like back here at the end of 20. So this is our rotation range, $90 to $130. Pretty good range. Really now we're looking at the moment, what is it doing now, and things like BHP. So it's actually risen pretty strongly over the last couple of months. It's hit this resistance level and stalled. Okay, now for me in this trading range, I can't really do much else. But what I'm waiting for is a break to the upside here, because that's my trigger. And again, I'm talking about price value and price action at this stage. I'm not worried about the value of it being $130, because I know it was 90, and our perceptions of that is it's now expensive. But if it breaks through 130, 135, it's quite likely it's going to jump that range again. So prices can move, and they exceed on the upside, as we know, exceed on the downside, so we should never be surprised. So it's the price action that tells me what I'm going to do, and I don't worry about the price levels. If it's $130 or $50, whatever it is, I don't really care. So I can also see here with Rio there, we've got a couple of big, look at those big green bar here, and a big volume bar down the bottom down here. And the next big green volume bar is this one here, again an up day, an up week. So there's some pretty strong support here for Rio, but again the sellers are sitting up here killing this stock at the moment. So we're in for a real battle at the moment. We've got a little bit of support down here at this low here. So we're going to watch this one pretty carefully, right? My feeling is, and of course I don't know if it's going to break to the upside, and probably because I want it to. But a break above 130 triggers a new high, and high probabilities of further rally in prices, and often they'll move this sort of distance. So this is $90 to 130, so about a $40 move is what you could potentially let out of this. So that's it. Price movement, not value, is what we watch. And Rio looks like an interesting stock to me. Trend intensity rating is +2. It's poised, cocked, and ready to run. Okay. All right. Now I can't resist. Qantas is just it's done it again. It's up 18% since we entered this stock, and that's only in about 4 months. So it's giving a pretty good return, CAGR at the moment. So Qantas, it had that big down tick for a brief moment 2 weeks ago, but ever since then it's rallied from 612 and it's now 677. So that's a pretty good move there. So Qantas had a good break here, still targeting this R1 level. Again, we saw the big red bar here killed the stock for a day, but the buyers came straight back in and whipped this price up, knowing it was a good opportunity. So Qantas is effectively a tourism stock. So we'll talk a little bit more about tourism a bit later on, but this is an interesting stock. Trend intensity rating is +8, and if it finishes the week up here, this week it's going to be a +10 next week. So go Qantas, keep flying, keep flapping those wings. You're doing really well. Okay, so that is Qantas, which I know I love, but I have loved it for a while. That's fine. I won't fall in love with it. If I am told to get out, I will get out, I promise you. Okay, Mineral Resources, again, an interesting stock, a bit like CAA. We're in this rotation range at the moment. Overall, we're in an uptrend, but we've got buying support down here and selling up here, and we are hitting the selling area again at R1, up at $90. So we've got a trend intensity rating of 8. We've had a good breakout here. We've followed it. Our stop is set here for us. It's not gone off yet. It'll be down here somewhere. And for the moment, we wait and see. But it's steadily pushing hard, and the trend is up. And so I always err on the upside for a break if the trend is up, because that's the mood, that's the sentiment, that's the behaviour, the price action that we're looking for. Okay, so that's Mineral Resources. There's a couple of good stocks for you, which you know that I like. They've done very well. The next one I want to go and look at is Fisher & Paykel, which is one of our downtrodden stocks that we looked at a few weeks ago, and stocks with opportunities. And sure enough, Fisher & Paykel just bounced up its 52% point down level, and it's kicked up from $16 to $24, so it's not looking too bad. Its trend intensity rating is +9. You can see the uptrend, the distribution, the downtrend, and now accumulation, and now uptrend again. Okay, I just say doing the Davis box thing, and I don't know if people who know the Davis box thing, it's a very simple process of looking at a stock that it breaks to a high, it moves up, it comes back to that break point and finds support, it then breaks through that high again, makes up there, comes back to that support point. So it rotates through this range the whole way, and that's how Davis box made his money. So at this stage, if I just blow that up a little bit, you can see that we're banging on this door really hard, and for 1, 2, 3, 4, 5, 6, 7 weeks, $24 has just stymied this stock for whatever reason. There's either a big seller there or whatever it is. But anyway, I'm quite happy about this, because when I look at this down the bottom down here, I can see that all these red bars killed the stock until finally the buyers came in, kicked it higher, and we're getting a good smattering of both red and green bars, but the green bars are dominating at the moment and the price is going up. So Fisher & Paykel, I will still hold this stock. I'm still holding this stock because it triggered a setup of mine, and it had a trend intensity rating of +9. So Fisher & Paykel is an excellent stock. I had more of a harder look at James Hardie this week. And it's a very interesting stock, and again, it's another one of our downtrodden stocks. It came down 52%. from high to low, which is a long way. Big correction, and we know when these stocks do big corrections, there are always opportunities because the stock market always goes up again. I repeat myself over and over, but that's the way it works. Okay, so James Hardie. Now, if I look at this now a little bit, I've looked at this range here, what's happening down the volume levels. And it's sort of looking like it's starting to try and find a bottom here. We've got a lot of red bars here finally, and you saw it with Fisher and Paykel, the red bars fold the downward move, but then we start getting a smattering of green bars, and we've got a couple of big green bars here, which both coincide with some up moves there. Okay, so that's a good sign of support we're starting to get from James Hardie. Remember, we haven't bought this stock, and if I now go back and look at the trend intensity rating, I see it is still -8, so it's still pretty shit, really. So we've got a long way to go for James Hardie. But we've got a start here. We're now testing the average. We've got the momentum starting to move back towards zero. So it's all happening for James Hardie. We just need to wait for that opportunity. We don't buy the lows. We wait for a reversal to happen that says a trend is now high probabilities to continue. So that's what I'll be looking for James Hardie. I don't know if I've got a reversal point here yet or not. But I am seeing this is the first resistance point, this is your low point. So I've isolated those two levels because they're important levels to me. A breakdown here means another down leg, and a move up towards above this level would certainly suggest moves higher. But we'll wait and watch for the actual trigger point on James Hardie. But it's an interesting stock, and you can see it's come back to this old high here area again, which is an all support area down around this $30 area. Flip through briefly, but it's back up again. Okay, so that's James Hardie. Eagers Automotive, which is also another recent addition that I showed you. It's just created a high low situation. We've got a downtrend in place here. It hits a low here. It's come off from 17 to 8, so it's a 50% downer basically. Not too bad. And we then get some good support here, we get some volume, we get a rally. Again, we're still waiting patiently for a bit more evidence here. Sometimes these stocks keep going, so be it. We don't get those, we miss those ones, and that's just the way it is. We always wait for our setups. We are in control of this market, not the market in control of us. So we do what we know. And here at this stage here, it did come back and it did create a high low. I mean, this is over a period of over nearly a year. So it's a long time this has occurred. So this high, we've had a pullback here, we've got a high low which is tested 1, 2, 3 times. Evidence builds that there's a demand appearing. It starts to break above the average. We've got a lot of things starting to say, we've got a low, we've got a high low, we've got to move above the average, and then finally we get a trend reversal point above here at 1338. And then it kicks higher again. So already it's up 7%. I don't know what it's done today. Trend intensity rating is +7. It's in the high trending zone. The volume was good in the bounce. Momentum starting to kick higher. So for Eagers Automotive, all the signs are there that are good. We always manage it with a stop just in case. Okay. So that's what I generally look for in a trend reversal, and that's how they look. Not that common, but you need to be able to make money from it, and that's the real key, the real trick. So there's a lot of work to be done yet, not just identifying a pattern saying, yes, this stock's going to go up, because it will go up, it will pull back, and we all sorts of things, and you will do all sorts of things in your mind, and that makes things a little bit difficult sometimes. So you need a trade plan to guide you. So here, we have now bought this stock, we've set our stop, and we are ready to go, and up 7%, which is a good start. Okay. So that is Eagers Automotive. So I do give tips every now and then, but I can't give them all to you because my members own my tips basically. So I've got to be very careful. I don't distribute too many of those. Okay, so Super Retail Group is another stock which I love. We know we've got the good break here. This is one of the ones we did win on in the reporting season, and we know that there was a sneaky things going on here before it actually released the report, and we got a jump here, we've got a big gap here and a jump towards those highs. Okay, luckily we got the sign here, which is nice. We've got a good signal here in the break above this level here, and it's now risen clearly up here. But now we have nearly got to the highs again. Okay, or the recent highs. So we are wary. Stop nice and tight now to protect a 19% advance I've got. I don't need to hang on for the 50% advance. If this gives me 19% in a few weeks, I'm very, very, very happy. Okay, if it goes through, I'm very, very, very happy. If I watch this stock go all the way down here, I'm very, very, very sad. So I don't want to see that happen. So I have my stop here just in case it come down. It may go higher, I don't know, but it's important that I lock in this profit to make sure my returns keep on the positive side of the ledger. Okay, so with Super Retail, which you can't even see the title there, I'll just show you that there so you can see what it is. Trend intensity rating is +10. All signals are powerful on this stock here, and it looks good. Just keep that stop tight because we are at resistance. Okay, so that's Super Retail Group. Been a fantastic stock in the CD and the consumer discretionary area. Here we have Harvey Norman. So it's the top down approach doesn't always work too well, because often stocks go in different directions. So that's why I like stock-specific stuff. Let's get rid of this top here because we don't care about the resistance at the moment. But we can see here we had a nice little trend reversal pattern happening here, and it was building up nicely, but until it is completed, we don't trade. And in this instance here, it did fail, and then failed badly. Jerry Harvey opened his mouth again, and people didn't really like it too much, and they took fright and they slammed the stock, and we're back down to nearly back down to Westwood, nearly back down to 350 again. So for the moment, Harvey Norman's off the table. The trend reversal thing has almost been nullified, and we just have to wait and see. At the moment, it's gone down from $6, new high, lower high, lower high, lower high at 450, and we've now got 350 to support this stock. If not, it will probably go back to 250. So don't be lured by Jerry's big comments, because sometimes if the price goes in a different direction, you've got to be very careful. Remember, behavioural analysis of price is what we do. Okay, so that's Harvey Norman. ASX, lots of stocks for you today, which is kind of fun. It's a very interesting market at the moment. Lots of interesting things happening here, especially on behavioural analysis side of things, which is what I do. Now, am I going to get this up or not? Difficult customer. Okay, so this is the ASX, and this is what it looks like at the moment. Now, the ASX, as I said before, there are stocks that will continue to go down, and we've got to be very careful we don't just buy a stock because it's low and it's cheap. Okay, so ASX has come down here, very heavy volume here. It's tried to rally a few times, a failure here, still support, still holds, but these lower highs are a bit of a worry for me. Stays below the average. Volume is still very heavy. We are still above the low, so that's a good sign, but the sellers are certainly giving this level of work over. 10-tendency rating of -8. Would I touch ASX at the moment? No, I wouldn't. It's in the low of the range. It looks interesting, but the sellers are still there. The price action is not good. So that just keeps me neutral at the moment. So for the ASX, it's a bit of a worry at this stage, and some of the things we've heard recently are not all that happy for a lovely monopoly stock, which enjoys the cosy, the moat around it that it has from its monopoly, but sometimes it doesn't really do its customers right. But anyway, that's the ASX. So that's all those stocks I've got for you today. I've got one more later on at the end of this, which will be a bit more of a brighter one to keep you a little bit more excited. But for the moment, I just want to go through trading tactics. And I did talk about the start of this, discovering price movement, because really we talk about value, we talk about price, we talk about defensive, we talk about growth. Really, all the main thing I try to do in behavioural analysis is analyse the price movement and the movement and what it's doing. Highs and lows are the key points for me. So if we go right back to the start, as you know, I do this all the time because it's where I base all my stuff. The life cycle of price is this. It has an accumulation pattern, it then trends up, it then turns over and distributes, it then comes down, it then accumulates, it then goes up, and this cycle just goes on and on and on. Okay, so that's what we're looking for. It takes all sorts of different shapes and sizes. That's why we've got to be alert to a few things and be a bit smart. We can't just say, well, this is happening, so that's happening. So we've got to make sure we know exactly what is happening. So I look at the Domino's pizza cycle, what it's looking like. It's gone from a big uptrend, we had an accumulation, had a big uptrend, had a sharp reversal from excessive price gains, huge price gains we saw, and then we saw a big top, we saw a big downtrend and accumulation bottom, which has been occurring now. So let's just have a little look at it and see where we are now with Domino's, for instance. Okay, so I hope you can see the chart okay, but this is just to give you an overall view. It's still in the bottoming stage. Okay, so this is going right back to January. We had a big uptrend here. We had a huge rally, then a huge reversal. Okay, and that's why we use a 15% stop. Once that goes off, we're out of it, and we just wait and wait and wait, and down it comes, and then hits $50 and starts to rally. And I've been following this view for a few weeks, and we've been getting quite excited about it. But I've been saying to you all the time, don't just by this rally, you have to wait for a pullback and then a rally, and that gives us much more substance to a move. So now we've got an answer to our question. Where are we now? We're still in the bottoming stage. Bottoms are fragile. They can be very nervous. The price gets a bit higher than the old sellers can get ready to sell a bit if they hold stock a lot higher, and the buyers can also vacate very quickly. So you've got to be very careful. So it's all part of the process of a bottoming process. Okay. So this is what Domino's is now done. So it was all looking good until this happened, and it thumped down, which puts the case for Domino's back quite a bit. So what of DMP now? So we saw this little this rally here. We had this huge collapse down here on huge volume. And so where does that leave us now? Okay, so certainly not this time, Jack. It's not going through. It didn't break that level, which was up around just below $80. Okay, so now what are the choices are? It can continue to consolidate above $50 and hold it, or it may break down below 50 and we get another leg down. So that's where we are at the moment. Consolidation to then create a reversal or a breakdown and further leg down. So what's the reason for this fall? Why has this actually happened? Okay, so this has been a fairly simple thing, but it's all relating to price, to behavioural analysis, what I do. So what's happened is the profit margin was down, rising costs in supply chain and pricing tension on some of its products. Its marketing strategy wasn't too right on some of its pricing, but generally rising costs in supply chain are hitting every stock. So everybody's losing their profit margins at the moment to a certain extent. Okay, big deal. Okay, it happens. It's the way business cycles go. But this stock has gone from $160 to $50. Is that a fair drop, and is it over? Well, we don't know, but it's price levels, and I don't really care, 160, 50, whatever it is. I'm looking at the price action. That's what's going to tell me what's going to happen next. So what value is Domino's? I can't tell you what value Domino's is. All I know is where I'm going to buy it and where I'm going to sell it, because the price movement tells me that. So valuing a stock's myriad of complex variables is a physical function that gives the stock a value. Great. That's great, but really does the price trade at that value? Because there's the physical price and then what we perceive and what we don't perceive and what we get scared of. That's what moves the price. So pricing a stock essentially can be like chasing a rainbow with a life of its own. It's a very difficult thing and it's a movable feast. So what we're interested in is price action. We are interested in neither valuing nor pricing a stock. Price action analysis shows the swings from buyer to seller, which in turn displays trends in that behaviour that we can then follow and profit from. And that's what we're trying to do, trends in the behaviour, not the specific weeks or specific days, because we know that can lead you astray if you get too close to a stock and try to analyse it too much. So looking for price behaviour. So with Domino's, it now has come back to try and maybe continue consolidation. It may break down, we don't know, but certainly not going to be an uptrend for a while. And as David Dicker says, and I said to you last week, the company's share price is not correlated to the performance, because the share price of Dicker Data went from about 16 down to about 8, and the share price performance hasn't changed, and the business performance has changed very little. Of course, we've had these supply chain and cost issues like every other stock, but the performance has been admirable for a stock, and the price change has been enormous, so it didn't really be justified. Okay, so just talking about value and price action, really what I'm looking for. So price action, not price value, is what I'm interested in. Some stocks go down, and we can't believe it, but they do. Does anybody remember a little stock called Lend-Lease? Well, it's still on the market, it's still listing, it's still trading, but it just goes down and down and down, and it was up around $21, at some stage it's now down around $7, and still not looking that flash. So, stocks can just disappear off the radar sometimes, and for whatever reason, they do it, and I'm not the person to reason why. All I do is look at the price action. At some stage, this stock will bottom, it will create a trend reversal, and we'll have a rally. But at this stage, we are still in a clear downtrend and not really any sign of accumulation. So for Lend-Lease, it really doesn't look that good. So that's what I'm talking about with price action. We want a price action. I'm not worried about values, not worried about pricing, any of that sort of stuff. Okay, so we must be guided by the price action, not the price. The price of a stock is purely a perception of value at any one point in time. And of course, that can change very, very quickly. Okay, so we've always got to be on the alert. We've also got to be responding to the market. We've also got to be responding to our trade plan. Okay, a trade plan responds to the market. Okay. So, as it did with Domino's, a market darling that crashed. Like Lend-Lease, this has gone from $160 back down to $50. It may go lower again if it does. That's amazing, because Domino's was a pretty interesting stock. It's almost like a tech stock, because it's a pizzas. It does AI to analyse where the pizzas are sold, who buys what pizzas, what the pricing things should be. So it's really, it's quite a high level takeaway stock, I guess, if you're analysing its consumer base pretty carefully. It'll be back at some stage, Domino's, but from what price? 50, 40, 30, I don't know. Okay, so DMP can and may fall further if that's what the market decides. D&P can also consolidate further if buyers hold the price above $50. We don't need to worry about that too much. We just need to worry about when the stock starts to going up and telling us to go up. So for the moment, Domino's is not on the radar. That's how we see and decide D&P's future, by respecting the odds. At risk, or at best, it continues to base. Okay, so that's really all I want to talk about with Domino's. Price behaviour, what I'm looking for. Don't worry about your price levels too much. Okay, so now, not to leave you with too much doom and gloom, we'll finish this week with tourism, which has become a little bit interesting lately. You've seen the Qantas stock go off pretty well. You've seen a new addition, Auckland International Airport. We've seen Webjet is also one that's come in recently and is now going higher. And Flight Centre is also, we're not set in Flight Centre, but it is starting to rally higher and looking good. And the little stock called Hello World, which I covered for you a couple of weeks ago, which is still looking very good. I just love this big pattern here, this big basing pattern here with all these lows across here. Certainly when this breaks higher, I'm going to be so ready to get on board this stock because it looks so good. Again, I'll manage it with a stop because it doesn't always work out exactly the way you want it to, but the probabilities are that a break through this level here will give us a good rally off this high. And it has come down from a long way higher, like a lot of stocks, and we mustn't forget that we are in a low state for a lot of stocks. Not the index is its highs, but there are a lot of stocks that aren't at their highs. So that's the stocks I've got for you today. There's lots of stuff there, trading tactics, interesting stuff about behavioural analysis and how that works. That's really all I've got to say today. Yeah, that's about it, I think, on there for the moment. So just to finish off, okay, just a little bit about tips. You know, some people say to the stuff I do in the YouTube videos, well, they're not ready to go yet. Well, what I'm trying to do is educate people on what I do and how I do it. All the tips that I do are really the domain of my members. That's their business. They pay me, that's their stuff. But I try and give you an idea of what you might like to see, of what you are seeing. So I try to explain how I work, how I make my decisions, and just who I am, so you can see me, and hopefully you get an understanding and gain confidence in what I do. You can then take a trial, and if you decide you gain confidence in what I do, then you might decide to take up a membership. That's what the YouTube videos are all about. So primarily, I'm actually an educator, trying to impart some of my 40 years of experience in the stock market. Okay, it's been a wild ride. I've learned a lot of things, and it's been a very interesting ride, and I still love the stock market even though I've been here 40 years. So some things don't change, but some things do change, but many don't. And more specifically, in the stock market, that is the behaviour of investors. All sorts of new instruments, new sorts of strategies, but in the end, it's the behaviour of investors that drive the price, and that never ever changes. Okay, so don't forget our advantage is analysing price, not value, in a discerning and methodical way to take advantage of the probabilities of one thing happening over another. And that's about it. Okay, so stay safe, watch your trends, heed your stops, give me a call if you need any help, and I'll see you again for next week's Insights. Thanks very much.